Okay, so in this video, I'm just going to do a quick analysis of how how I trade, and what we'll be doing is looking at the Euro USD, and we'll take it down through a top-down analysis. So it's a common thing that most traders do. I'm just going to show you just like the quick things that you should be looking out, and then possibly make some trades. So this is current today's time, so the 3rd of April 2019. So as you can see, we're already on a month chart here. So what this symbolizes, each of these candles basically represents a month of price action. So the first thing that I would actually do is begin by just drawing some trend lines, and that I can just see straight off the bat just here. So what this means is, although this is a simple tool, it is respected in trading in general, just in any form of analysis. So what is happening here is price has reached all the way up to this point here and has rejected it strongly. So it's basically rejected, and it's come down to another support zone, and it keeps on doing this until it finally breaks through, or it just may never continue to do that. So then we can see, so we've got like a general we have like a general trend line going downwards. So this is current. So, and then we can also say that structured trend. So what that means is we're making new lows and new lower highs. So if we see this continuation, so as you can see, these are getting lower, and these are progressively getting lower as well. So this ultimately means we're basically in a downtrend, right? So we know that if we were to look on a very larger scale, we're looking now at a downtrend. So what we can now start to do is make some support zones. So zones are basically areas of the market where it's respected. So it basically like the trend line, but in another opposite way. So just quickly drawing this one right here, and it's like it's a give or take area. It's not exactly anywhere precise. I'm just really just doing this really quickly, but what we can say here is the prices basically comes to this point, and it rejects, etc. But here it's interesting to say that it went straight through. So from 3 consecutive months it burst through, and it now came back to another support level. So we can come back here, and we can now draw another support zone, so which I'll do roughly like this. And you know it's valid, this support zone, if it's in confluence with other previous history in the of other price actions. So like here, like it's coming into this zone. See, it's in 1991, and we can also check this one here, so we can see it making a bit of sense here. So there is a bit of confluence, so you could say that this is correct, and it's something that we can only look at this because we have to take this as judgment using price action from the history, because that's all we have to predict the future. So so prices come and burst through this zone, this support zone, which is very significant. So now we come on to a retest, and now it's basically saying we're basically on a decline still. So this is just a monthly zone. Now, how we would take advantage of this, that now that we have our little short-term bias, which is short, so we're selling, we're looking for short orders only. Well, we need to look on a different time zone. So we are currently on a month, but now let's step it down to a week, and things are basically, they make a bit more, it makes more of a picture sense. So as we mentioned before, like this was the first support zone that we made that burst straight through, and this is our current support zone now, and this now forms resistance because it ultimately rejected. So I'm just going to put R for resistance. And now this is ultimately support. So what we now look for is some sort of confluence again. So we can now redraw the same things that we just did before. So can we see any structure? Can we see any trends? Can we see any support? So I'll just quickly let you make your own analysis of this. I'll change the color. Let's do this one. Do my color. Okay, so yeah, so having a look, I can quickly just by drawing what I would just do, just for personal. I like to see it as if something has broken. So this was a current trend line. So this was currently an uptrend. This was uptrend, right? Because we have higher highs and higher lows, higher highs, and then it came to this area here. This trend line that we drew earlier on the month one is significant because it shows, look at all this sell sensitivity that we can see. So all these pin bars. So I'm just gonna remove the yeah. So if I just zoom in, you can see all these pin bars. So for those that don't know what pin bars are, it's basically just where price action doesn't actually close there. It means there's a lot of sensitivity in this area, and there's a lot of confluence here. So a lot of traders do confluence trading, and I feel, and it is good because you can make a lot of money, but you'd have to risk quite a bit. So say we was around here and we're looking for some sort of sell order, we would be risking something like 245 pips, and then this is ridiculous. Like, this is a very long-term sort of mentality, but like currently, if you was to put a sell order, it's 1,200 pips, which is ridiculously a lot. But um, for most traders, they don't really do this sort of style. The reason why I'm showing you this is because they use this type of analysis to condense it down to finally find your trades. Okay, so if we now say that we're in some sort of downtrend, wouldn't necessarily. So yeah, we would look for another. So sorry, we will start making our support zones. So which we did before. I'll do this in orange. So this would be for me a support zone, and you can see what has actually happened at the current price action. And is there one more possibly? Yeah, I would potentially put one here, but no, I'll leave that one for the next one. So we can start to see now that so price actually came down and it tested this zone here, which was formerly known as a resistance bar, but it failed to become support, even though it passed the first time. So now we can presume that this area is significant as a resistance again. So we now look at this as we will treat this as a resistance. Oh, it's a ridiculously yeah. So like this is now, this zone here, this orange zone is now resistance. Okay. And now we'll step it down again. Just take it one more. And so we can start to see that we're aiming towards this area again now. So we're ultimately looking to come down, but that is the long-term picture. So we have to let the market do what it wants to do, and we need to find entry points and etc. And what we do again is literally the same thing. So we do our trend lines again. So I can see it's just very simple. Just one here. Just one. So like I said, we're just building confluences together, and we can also start to draw some. Can also start to draw some support zones, but it gets a bit difficult because we have to look a bit more further down, which we could say roughly here. So this would be, so I'll just label it for simple terms on a horizontal line. It was roughly around here. So what we would say is this could be our first take profit zone. So this line here, change the color to green. So what we could say now is that we do our top-down analysis from month, week, and day, and we can say roughly that we are looking for a short from this trend line, right? So with some sort of risk to reward ratio, which is a lot larger. So if we take it down, so this would be a very long-term sort of scale. So the shorter we go down on the time frames, the more specific we can get with when and where to enter our trades and how we can reduce our risk to reward ratio, reduce the risk and get more reward, right? So and then we just do the same thing again. So draw our support zones, well trend lines. Sorry, we draw our trend lines. So just something simple like something like that, perhaps. It's a bit of a tricky one, this one. Yeah, just something simple like that. And then we draw our support zone again, right? And we could say that this little support zone is significant because it's tested once and it's going to test it twice. So we're now on the 4-hour candle, and some typical traders use, I use as well sometimes, is bullish engulfing. So even though we said all this time we're going to sell, we can, because we've said that this is support, we can use this support zone as support, and we can predict where price may actually go. So in the likelihood event, the price is more likely to reach up to our higher time frame trend line because we've tested here. In order for this to basically break out from this current downtrend, is it has to break this trend line and it has to support here. So what it may do is it may get the brush. It may come down here, which it has, comes up, retests this top zone, this little zone where I'm just pinpointing down, and then comes back down and test again, and then it might shoot up. Another scenario is it could test, it could literally test it 3 times. Oh no, sorry, it could test the support zone twice, but then eventually break down. So that's the thing where you have to wait and see where this market go. So this candle right now is 30 minutes away. So in 30 minutes and the next 4 hours, we can presume where price could actually go. So even though I was saying all this time, yeah, we're looking for shorts. If we know that this is now valid support, it's likely that price would retest some other resistance, and the closest resistance here is a significant resistance is this part here, which is this trend line. So something as simple as that. So you can see how we've cut it down from take profit zone could be anywhere between here. So I personally would go from structure, previous structure support to resistance. So it would be here. And what I mean by that is price came here and tested this, and now is support, and then it eventually broke through very strong. So that would be my target if I was to take this trade. And there's a nice 2.0 risk to reward ratio. But you can see like how we first started off with something ridiculous, as in this red part being 300 pips to a ridiculous amount of reward. And the lower we go, the less risk we get. So it's all in balance and preference of where you want to be at the market, how long you want to look at your screen, how many times you want to trade it as well in a day. So so that is it for my version of a top-down analysis. So I do teach this to all of my current members on a one-to-one. It's a session that is external towards my service, but this is just a very generic overview of what I sort of do, and we work together with students to perfect their own strategy and make some rules to find specific entry points. So right now, people would look at this trade and just say, okay, he's saying buy because he's done all this analysis. This is not necessarily correct. The reason is because I've not put any rules together and I've not back tested it, but there's certain specific rules that I personally have that would possibly get me into this trade. So this is what you need to do, is to take the information that I've kind of explained to you with top-down analysis, and then incorporate it into your trading style, see how it works for yourself, and make some rules and find a trigger for you to take yourself into that trade. So that's all for this video. Thank you very much for listening, and I'll catch you in the next one.